Hi, this is Mike Swanson of Wall Street Window. I'm speaking with Jordan Roy Byrne, who runs the website thedailygold.com. How you doing, Jordan?
Hey, Mike. I'm great. How are you?
Oh, I'm doing good. I really want to ask you about gold because that's your area of expertise and something I think is really important. But before we get to that, I just real quickly want to ask you about the stock market because, frankly, most people who listen to my podcast are American investors, and there are most American investors are obsessed with the U.S. stock market and at the moment have very little interest in gold. They don't even talk about gold anymore on CNBC. And people are really shook up. They were shook up a little bit in August, but now I think they're starting to believe in the stock market again. The drop that happened in August really took people by surprise, but most of the commentary in the financial media is suggests that all we've seen is a mild correction in the stock market. And as we are speaking this week, the Dow fell over 250 points, I think it was, or 230 points the other day, but then had a strong bounce. And this move happened as the S&P 500 approached its August low. Now today we seem to be mixed as we're doing this discussion. The S&P, the Dow's just down 55. So a lot of people are saying that we're set up for a double bottom formation that could launch a massive rally into at least the end of the year, and you need to hold on to your stocks or buy more, double down even. And this is really the trade of a lifetime is what these people are suggesting. And this is like the consensus. So. And it's what's on everyone's mind is this right? Will the August low hold? Should I double down? Or should I use this bounce to sell? So I want to ask you that first. What do you think? Is this the real deal or not?
Well, the current bounce right now, I would use that to be a seller. Taking a step back, every index is different. If you look at the S&P 500, it looks like it's rallying from support at the August low, but I know the Dow hasn't gone down that low yet. The New York Stock Exchange, which I believe has 5,000 stocks, although I could be wrong. It might be a little more or a little less than that. I believe that's already gone through I'm just looking here. Yeah, that's pretty much already gone through the August low. If you look at the all country weighted index, that's an ETF I like to look at for global stocks. And also you can look at the Dow Jones World Index. Both of those have already gone below their August lows. So the very broad indices have already lost the August lows. Now coming back to the S&P 500, you can kind of say it's having a double bottom right now, but it looks really weak. It looks like this rally, this strength that we're seeing right now, it might continue into next week. But I think you want to be a seller of this. And the reason is, in my opinion, is because when you're looking for a market to rebound, you really want to see a combination of extremely bearish sentiment and the market being extremely oversold based on technical indicators. Now, sentiment is very bearish, except sentiment on the overall market hasn't really worked that well in recent years because recall that in 2013 and 2014, sentiment was flashing warning signs, but the market kept going higher. So I'm a little nervous about using sentiment right now. In that case, you really need to wait for sentiment to get extremely bearish, not just very bearish, but extremely bearish. Now, going back to technical indicators, a couple easy ones that we can use are looking at breadth indicators, such as what percentage of stocks are trading above the 50-day and above the 200-day moving average. Now, for example, looking at the 200-day moving average, if you go back and you look at the 2011 low, the chart I'm looking at the 2011 low, that was around 10% or even below that. You look at in late 2008, that was trading between 0 and 5%. And if you go back and look at in August, that indicator got down to, I believe, about 15% or so. At the end of yesterday, it was 27%. So 27% of stocks in the S&P are trading above the 200-day moving average. I really want to see that come down to 15% or near 10%. Now, if that happens and it gets to that point, that's when you need to understand that the market is getting really oversold and we're going to have a bounce. The same thing can be said for the percentage of stocks trading above the 50-day. At the end of yesterday, that was 19%. In August, it made a low of 10%, but I think you're going to see that go below 10%. And so, and another thing you can look at is the number of new 52-week lows. When that spikes to a certain level, I mean, you'd have to be looking at the chart that I'm looking at, but when that spikes up to a certain level, and in addition to the other two indicators that I just mentioned, getting oversold, that's when you need to, as a bear or as someone who's short, that's when you need to be defensive and realize that there's the odds for a pretty good rally that could last a couple months. I do think we're going to get a rally that could last a couple months in the stock market, but that could only come after perhaps a lot more selling in October. So I think over the next 3 or 4 weeks, this month in October, it's possible that you could see those lows break in the S&P 500. And if that happens, you could see a lot of selling. But if that is the case and that happens, then at the end of the month, you could see the market set up for a good snapback into the end of the year. And then perhaps you get the start of another leg lower at some point early next year. So that's how I see things. I'm definitely on the bearish side right now, but if these lows do break in the next couple of weeks, I will be looking for the market to make a low and then have a pretty good bounce for maybe 2 months.
Yeah. So, are you most of the Wall Street consensus earlier this year, and they're still using this phrase. In fact, I'm on Yahoo Finance as we're speaking at 3:30 on the 1st, and the headline is unemployment rate to decline, but Fed liftoff to hold until March. And the phrase liftoff is one that's been echoed, trumpeted all year long by Wall Street analysts and people on CNBC, trumpeted again at 3:30. And what liftoff means is that the economy is about to take off, that all the problems that were apparent in 2008, 2009, and so forth, the weakness in the economy over the past couple of years has been fixed. And we're about to experience high growth rates that's going to drive unemployment levels very low. However, the Fed is going to raise rates only once or twice. And this call right now that just came out as we're speaking is by RBS, one of the greatest minds on Wall Street, according to CNBC. And they're saying that the Fed rate will come in March. But the consensus is that the Fed will raise rates once, twice, perhaps 3 times, but not enough times to hurt the stock market. And if there's any stock market weakness at all, that they will step in to create more gains and more rallies for stock market players. So are you also of the opinion that basically the Fed has our backs and we shouldn't worry about stock market declines at all? Even what you were saying, sounded like a minor decline and we just get a rally for a couple months afterwards.
I mean, the quote that you were reading is nonsense, because we have to understand that when the Fed wants to hike rates and the economy is doing well and the market are doing well, and they do hike rates more than a couple times, the market will keep going higher because it's strong enough to deal with that. Usually it gets to a point where they hike too much. They've been hiking for a couple years. The market's gone up too much. That's the point when the hikes start to have a negative impact. So if the Fed can begin a hiking cycle, and they can hike more than a couple times, that's positive for the market, because that tells you that the market's, the economy's picking up, perhaps inflation's picking up a little bit. So, I mean, those are the things to look for if, you think that the market is going to have another, big move higher for a couple of years or whatever. But this idea that the Fed's not going to hike, or they're going to hike only once or twice, and that's going to be bullish for the market. No, that's really not bullish for the market in the long term. You want to see them be able to hike rates consistently for more than just a quarter or two. And if they can actually do that, the market will go up, because it means the economy is strong enough to handle that. Now, I don't think that's possible in the next year. It might be possible at some point. I mean, perhaps if we have this bear market, maybe we have a 30 or 32%, 35% bear market in the S&P and the rest of the world, and then the rest of the world starts to recover, and then we naturally start to recover in a maybe 18 months or 2 years or whatever. That could be the scenario where that happens, but I'm not sure I see that happening in the next year.
Yeah, it's tough. It's very difficult to predict. Things. The farther out we go, the harder and harder it is to predict. But I'm actually, real interested to know personally what you think is going on in the gold market, because in July we saw gold stocks really have a crash bottom. The GDX, HUI, XAU, the different things to measure what mining stocks are doing, they were down almost 10% on July the 20th, which I don't think it's a coincidence that that's the day the NASDAQ last made a top. Now, I think that's the top we're going to see for years. So I think it was actually a very significant date. But what's interesting to me is that since that date, the gold stocks and gold itself, which may be more important, they have been performing better than the stock market on a relative strength basis, even though they haven't been, going up week after week or anything like that. And I would think that suggests that some sort of breakout is likely to occur, where gold goes through a resistance level and begins a new bull market, or at least a really powerful rally. Although, it's not doing that today, it may not do that tomorrow. But I think the relative strength is an indication that that's a real potential possibility. Do you see that too? And if so, when do you think such a move like that could possibly happen?
Well, the relative strength point that you're making, that's an excellent point. I mean, that's something I've been looking for in the last year or so. I talked about it in my book, where we need to see gold break out against the stock market. And I wrote an article at the end of last week. And I like to use on my charts the 400-day moving average and the 80-week moving average. And looking at the 80-week moving average, charting gold against global equities and also the NYSE, those ratios moved in favor of gold above the 80-week moving average for the first time in 3 years. So the relative strength in favor of gold, it's making a lot of progress there. The other thing I've been looking for is I want to see gold break below 1080, because I know that if it does that, it's going to get to 1,000 soon, and then it's going to start to bottom, and that'll be the end of the bear market. I mean, that's what I've believed for the last year or two. I still think that's going to happen. So the relative strength thing, it's very positive, but it doesn't mean that gold is going to immediately make a new bottom and start rising. I mean, unfortunately, Mike, that I'm a huge precious metals bull, but looking at the near term right now, I'm really worried about gold, silver, and the gold stocks. I think we could see a real nasty sell-off in the next month or two, just the way things are setting up. If you look at, because gold's had a pretty good rally over the last 2 months, but since then the miners in silver have really gone nowhere. They've done nothing. The bearish sentiment, the things that I track, it was really bearish in July, and that's basically kind of been unwound right now. And if you look at the charts of silver and the gold stocks, I mean, they're threatening to break down to new lows. And it just, the rally that they had over the last couple months was really weak. All the strength that they had, it was, I mean, whatever strength they had for a couple days, it just disappeared quickly. I just can't speak enough to how weak the miners look right now. And I would be really careful here with the large miners, because some of these companies are going to go bankrupt. I mean, they're going to be in trouble. I mean, if you look at GDXJ, the junior miners, and it's really the large juniors, it's not the penny juniors, but the large juniors, if you look at the GDXJ, versus GDX, you look at that ratio, it's been trending higher for a while in favor of GDX. So, I mean, anyone who owns the large stocks or you're playing GDX, I would be really, really careful with that right now because, I mean, it's been consolidating over the last couple months. As I said, GDX from about a low of 13 has a high of 16. If this breaks below 13, it could go down to 10. So that's a potential downside target. And like I said, I mean, there's some of these large companies that are in the GDX. I mean, they could go to zero basically because they have way too much debt. And if you see gold go below 1080, it's just going to be hard for some of these companies to survive in their current form. So I would really stay away from GDX. I would focus my buying on GDXJ, and I'm not going to be buying anything until we see gold go below 1080. And I think if we do get this breakdown that I'm talking about, that could really set up the end of the bear market. So I think people just need to be really careful here. I mean, over the last year and last several months, I mean, there's been times when I've bought things here and there, but I've just been stopped out because I haven't been able to rally. So, I mean, I've been advising my subscribers to hedge, and we have some short trades going. And, unfortunately, I wish I could bring better short-term news, but it looks to me, and Mike, perhaps this could coincide with the stock market too. In October, it could be ugly for both precious metals and the stock market. But I think at some point, whether it's the end of this year or early next year, you'll see precious metals begin a new bull market. So I think, the short term, call me really, really bearish. But if we're looking out 3-4 months after that, I'm going to be very bullish.
Well, right now, it's October the 1st. It's last year, one last thing. I don't want to take all your time up, but it's October the 1st, and this month, as we enter this month, what do you think is the most important thing that you're watching when it comes to the markets?
Oh, it's an excellent question. I mean, with respect to the
or to anything. What's the
with respect to precious metals, I'm really watching for gold to break below 1080. I mean, I'm looking for gold. I think it could bottom in the 970 to 1,000 range, and the miners have been leading these moves down. So it looks like the miners could break down to a new low before gold breaks below 1080. So when we see gold break below 1080, I think the miners are already going to be extremely oversold. And I'm going to be watching when we see gold trading at 1040, 1050, whatever, to see if the miners are going to start bottoming then before gold. I think that's possible. I'll be watching that. And I'll also be watching, you want to look at the weekly charts. Just watch and see how everything's closing the week. Because that tells you a lot more than the daily charts. So that's another thing I'm watching. And then also with the stock market, I'm going to be watching, like I said at the very beginning of the interview, I'll be watching these breadth indicators to see if the stock market starts another leg lower, the S&P breaks that weak double bottom that it has right now. I'll be watching those breadth indicators for signs that the market's going to be really ripe for a big snapback rally. I don't see that right now, but like I said, if the market breaks to new lows and goes lower this month, I'll be watching those breadth indicators to tell me that, it's time to take profits on shorts and, perhaps make a trade on the long side.
Okay, sounds good. Well, thanks for taking the time to talk to me and everyone else. We'll do a follow-up interview soon when you're available.
Thanks so much for having me, Mike.